And we're live. Welcome to the Interop. My name is Sebastian Couture. The Interop is all about exploring the decentralized economic networks that make up the Interchain. And today I'm here with Hyung Lee, who is the CEO of Crescent Network. Hey, how's it going?
Hey, thank you for having me here.
Yeah, well, thanks so much for coming on. I know it's late in Korea, but yeah, we've got lots to talk about and really interested in diving deep into Crescent. So, like, Crescent is a project that, like, obviously being in the Cosmos space, like, I've noticed, I've like seen around, like, I've been on the app, like, you had a little bit of tokens in the airdrop, but it's a project that I realized, especially when we were chatting in Korea, because we met in Korea a couple weeks ago that
Mhm.
project that I only kind of knew on the surface. And in chatting with you, I realized that there was a lot to this project that I hadn't really I hadn't learned about. And so I wanted to get you on the podcast to dive deep into, Crescent,
Mhm.
but also like your hybrid AMM order book model. And then beyond that, there's all sorts of interesting things we can talk about, including like cross-chain DeFi, liquid staking,
Yes.
governance, and a lot more. Because you've been in the Cosmos space for a long time.
Yeah.
Um, yeah, so tell me a little bit about your journey and starting from way in the
Mhm.
beginning, and
Mhm.
and how you got to building Crescent.
Yeah. We started our team way back in 2018 March. Before that, I was like a market maker and arbitrage trader for 10 years in traditional finance, and then we created this company to participate in the blockchain ecosystem. So, like, my first journey was actually Ethereum to do some DeFi product for fund management. And there are like several projects such as like Economy or like Melonport, but
Mm,
there are no good DEX at the time. There's no liquidity. There's no DeFi product to be connected. So it's like creating a fund is almost impossible because there's no DEX to trade tokens. So
yeah,
at that moment, like creating fund is impossible, but also like the gas fee is too expensive and everything was very inefficient in Ethereum. So we started to research on Cosmos after 3 years, 3 months from our company creation, and then I just like fell in love with it. I love the community. Also, I love the vision to have like millions of blockchain. That is an obvious future because
yeah,
there are lots of like different project and teams and community who are like not friend each other. So they want their own sovereignty. They want their own independency. So like different companies, different community builds different blockchain, and those blockchain need to be connect each other. So like millions of blockchain is a very obvious feature I saw in 2018. So since then, I was like deep in Cosmos and still I'm in. So we are like Cosmos OG, providing the contribution for the network, participating in validators, but also participate in research and development for DeFi modules. So we collaborated with Tendermint and ICF to create different kinds of modules or contribution to Tendermint and Cosmos SDK. Finally, we built GravityDex on Cosmos Hub. And this
yeah.
is finally we decided to migrate this to our own chain, app chain, which is Crescent Dex. And now this Crescent Dex has a hybrid Dex feature with ranged liquidity. And then we are expanding to more functionality called Crescent Boost, which will connect different DeFi's in different blockchains. So multi-blockchain DeFi gateway.
Cool, cool. Yeah, and I mean, this company that that you were talking about, like this company that you were working at early in the early days of Cosmos, was Bee Harvest.
Yep.
And I remember, like, when the Cosmos Hub chain first launched, Bee Harvest being one of the kind of dashboards that I would go to get information
Mhm.
about, like, like the chain, like you had a block explorer, I think. And
Yeah.
I
I think perhaps at some point I was probably staking my atoms with you guys. So like, you know, you were definitely part of the, you know, like the Cosmos community like early on, and I think, you know, this group of validators that were part of the you know, the incentivized testnet and like the game of stakes and everything. What was it like being there, like in the early beginnings? And you know, what's changed? Do you think that there's been like a huge shift in vision, or has it stayed pretty much the same since then? You know.
Mm-hmm. So yeah, at that time, I was really enjoying working for this community. So like it was like my first time like working more than 12 hours per day, but still happy to do more work. So I was more like a get into this community, talk about the future of Cosmos, and participate in many activities. So like still nowadays, if I see like those like OG people, uh, even though I met them like just one time, like say 3 years ago, still it feels very strange and weird, but it feels really good because we were in the same space, like virtual space 4 years ago. So like that is a very special moment for me. So that is very excited time. Yeah.
Yeah, no, it's been a really exciting time. You know,
Mhm.
I think like Cosmos is definitely going through, you know, has been through its paces. And I wonder, you know, I have this kind of I don't know if you want to call it a theory or a thesis, but I feel like Cosmos is entering like a new phase in its development. And I'm reluctant to use Cosmos. I try to use Interchain as much as possible, just because I feel like
Yeah.
that term is more appropriate to describing like the future. And really, this is it, right? There's the Cosmos era, and then there's the Interchain era.
Mhm.
And the Cosmos era was, you know, I would qualify it as like the time during which obviously the Cosmos Hub was launched, but then a time also during which lots of app chains were launched. Many of those app chains, you know, led by, you know, folks who are close to the Tendermint team, close to the Cosmos team, perhaps, you know, also people who left to build their own thing. And that's kind of the Cosmos era. And then IBC came on. And the time in which we're entering now is the Interchain era, where there's all sorts of new infrastructure being built
Yeah.
that, you know, isn't tied to this Cosmos era. You know, you have things like EVMOS that, you know, of course, like, you know, Fede worked over at Tendermint, but EVMOS is opening up Cosmos to the
Yeah.
entire EVM space. And then you have like totally new teams that are coming in,
Mhm.
like Polymer and
Yeah.
Penumbra and Composable Finance, who are trying to expand, you know, the functionalities of the Interchain even further. And
Yeah.
so, you know, do you see this also, or like, are there more divisions to, you know, to this kind of
Yeah.
timeline of the Interchain?
Yeah, so like way back, like in 3 years ago, we lived in the Cosmos ecosystem, so we didn't see much. We saw the activities around like Ethereum and other layer one blockchain ecosystems, but still our activities closely, tightly connected each other within the Cosmos ecosystem. But there are like not much like activity from outside. But now we now see a lot of ecosystem outside Cosmos. So this Cosmos ecosystem is still very small, but still, if you see like Solana, if you see like Polygon, or if you see like Ethereum, we see a much larger ecosystem having more interest in Cosmos and inter-blockchain communication. So I think this is really exciting time right now for Cosmos ecosystem to invite a lot of like different ecosystem from different blockchain, so that this like mix of other external ecosystem combine into Cosmos to become more like inter blockchain ecosystem. So I think this is very trending and exciting time for Cosmos.
Yeah, I think so too. I think right now is probably like one of the most exciting times in the space. And one thing that it gets me really excited about what the next year or two, and in a lot of ways, I think that in the same way that IDC launching about a year, just over a year ago, or going live, created all of this innovation and all like this kind of Cambrian explosion of apps and innovation in the Interchain. What we should expect this year, I think, will even expand it even more broadly. So interchain accounts, interchain security, interchain queries, all of these new exciting new paradigms and features. What are the things that you're most interested about in the next year, and where do you think it's going to take us?
So our focus on the ecosystem, especially interchain ecosystem, is that we are going to connect different DeFi's in different blockchain. That is what we are focusing right now. So from our team, our purpose and goal is for the users to have a convenient gateway for users to connect to different DeFi's without researching or like reaching out to different blockchains, multiple blockchains. So I think there are different DeFi's in different blockchain, obviously from Ethereum, but also in other blockchains. And if we want to like use this like different products within one ecosystem, then there should be like better connectivity like IBC or bridge so that we can rely on. So this connectivity issue will be a core thing for the near future expansion of connectivity. And also like tokenization of all these kind of like complex DeFi will be another key issue, because like tokenization gives us standardization of any position so that we can create more finance upon it. So like this is like an ETF in stock exchange. So ETF creates a lot of like new financial utilities because everything is same ETF. So we can standardize everything, risk and return and other aspects. So I think we are focusing on this connectivity, standardization, and like a vertical integration of multi-chain DeFi. So this is we are focusing on. So you're muted, I think.
Right. Sorry. So let's dive in. Let's dive into that. Crescent, I think I would describe it as a hybrid AMM and Orderbook DEX. There's it turns out there's lots more to Crescent than just this very simple explanation. Talk about why what's the vision for Crescent, and what is it that why is it interesting to essentially merge this traditional market structure, which is an order book, and a more novel automated exchange mechanism, which like by all accounts was invented a couple of years ago, and why is that sort of the holy grail for building a DEX?
So let me explain this as a historical context. So at first, before blockchain, there was order book. So most of the exchange in traditional finance, they use order book to trade different assets. So after blockchain, they tried to create a DEX with order book on Ethereum, but obviously it is like practically impossible because of the gas cost, and the performance of the blockchain is too low. So it was impossible. They had some service, but it was like off chain. So there was no decentralization from blockchain. So it was failed. And then like 2020, this Uniswap came out to provide different kind of DEX utility. So it creates a different innovation, which is that it is I think efficiency of gas cost is not an important thing in this context, but that was the practical reason. But another reason is that the on the market maker order book side, market making was only participated from professional market maker. So this was very close competition within very big market makers, and they are having all the market share in the world, having this market making business. But this Uniswap AMM opens this like participation opportunity to anyone, so that if you have any like Ethereum and other assets, then you can just deposit into pool to get this like trading fee from these participants. So you can become an exchange itself. So like Binance, if you see Binance, and the Binance is the exchange, Binance gets all the trading fee, and then it can be a little bit shared by market makers, but still all individual participants cannot participate on this activity. But in Uniswap, Uniswap itself is not an exchange. Exchange is like liquidity provider who are taking all the transaction fee, so they're getting revenue from their providing liquidity. So this is like a democratization of market making participation to the world, so that anyone can participate in this activity. But still, this AMM functionality has a very restricted freedom for market makers to participate in the market, because this constant product model restrict users to provide liquidity with a predefined algorithm. But the order book provide maximized freedom for market maker to provide liquidity with their own strategy. So this is like big difference for this freedom. So order book has a good point about the freedom of market maker strategy, and AMM has a advantage to open this participation for the users. And recently, last year, Uniswap opened concentrated liquidity, which is like Uniswap version 3. And now SushiSwap is following with their new product, Trident. And so this will be going on with like other AMM also to make it more efficient. So this AMM is evolving to better utility right now. So this AMM has its advantage to open this participation for individuals, and market maker can have more freedom on the order book. So obviously they have each of their advantages. So losing one of them is like having a half feature for the DEX. So we decided to have all of this in one DEX so that we can take the advantage from both innovation. So that was the original concept for Gravity DEX. So actually, we didn't open the order book UI for Gravity DEX way back ago, but still, the Gravity DEX backend code base already include the order book feature within it. So it was already a hybrid DEX, but it was too innovative, so we couldn't open it from start. But now with Crescent, we can move faster, so we can open this functionality. So April this year, we launched our blockchain, and then July, after 3 months, we have a great big upgrade with opening the order book UI and also range liquidity, which is similar to Uniswap version 3. So we evolved our AMM, but also included our order book UI so that users can use this like freedom of market participation.
Okay, so essentially, you're saying like the Gravity DEX backend, which people might also know as Emrys, which was a project that was being stewarded by Tendermint, Ignite, and sort of branched off to become its own project, to become Crescent. That backend had an order book mechanism in place, and also an AMM mechanism. What's the interplay between these two functionalities? How do they practically work together to form, sort of like the Crescent DEX? And from a user perspective, like when a user interacts with an order book DEX, they know what they're looking at. They're looking at like an order book, and there's like, buy orders and sell orders, and it's like, that's an order book DEX. And then when you look, or an order book exchange, and then when you're looking at an AMM, well, what that looks like too, right? It's like, here's a token you want to swap for this one. And that interface, I think, was kind of pioneered like way back in the day by Shapeshift, and then later by Uniswap. But what does it look like when, what's the user experience when you integrate both of those things together?
Okay, so I can explain this hybrid DEX as a order book based DEX with liquidity from AMM participating on the order book as a participant. So you can imagine like you have like 3 different pools for one pair. Then for each pair, we have one order book. And within one order book, there are 3 different pools providing liquidity on this order book. So if they provide this, like one of each pool providing liquidity on order book by placing like multiple limit orders on the order book. So if you connect to our website, you can see the order book there. And then if you see the order book, then you can see like very similar amount of orders like in each tick, so that users can trade on. So this liquidity is coming from AMM. So AMM is like a person participating in order book, like a market maker machine on the order book, so that they can place all this order based on the constant product model from Uniswap. So they just provide this liquidity like a machine with their predefined order algorithm. So this is like order book. So basically, this is just the order book, but AMM provide liquidity onto order book.
So essentially, you have the order book, the AMM liquidity pools are fulfilling orders in the order book. So it's like a set. You have individual buyers and sellers that are matching those orders. You have potentially market makers and more professional actors that are also matching those orders and looking to profit on the spread or like participate in arbitrage. But then you also have the AMM. The AMMs and in the liquidity pools that are fulfilling orders in the order book as a sort of like an automated market maker, the same way that you would have like a professional market maker. What's the impact on the price, like on price discovery, and how does this new paradigm of having an AMM also participate affect like price discovery?
So AMM discover the price by its own reserve token ratio. So it doesn't have any other oracle to listen to the external price. So the AMM price is very passive. So they provide orders from their own pool price at first, and then there's an order book which the price is like moving on the order book, and then there's a difference between the order book price and pool price. Then this pool provide liquidity which is like transactable within this difference area of the price. So it converts each other to become a single same price. So this is like a continuous like convergence of price between order book and each pool, so that they can find the single price equilibrium price each other. So this is how price discovery happens within Crescent.
And when an AMM fulfills an order in the order book, is that an automated? How does that happen? Is it written on the chain where there's certain criteria that allow those orders to be matched, or is that a manual process where people are acting on behalf of the AMM? How does that work?
So we have a exact mathematics within the code base, so that the AMM provide limit orders for each tick with calculated amount. So this is just like other limit orders from users. So that they are matched each other as a limit order also. So there's no like prioritization, or there's no like different mechanism to match pool orders and users order. So pool's order just treat it as another order from users, and they just match each other from the order book matching mechanism.
Got it. And what's the like when you say that there's ranged pools, is that essentially like the implementation of Uniswap v3, or is there a different mechanism that you guys have implemented?
So the mathematics behind it is almost same, but the difference is that it is acting on the order book, so their liquidity is provided onto order book. So that is a difference, but the mathematics can be similar.
Okay, understood. So you guys wrote this post about liquidity and efficiency, and I'd like to get your thoughts about how this makes liquidity more efficient, and if this is a model that will be adopted by, like, if there are clearly more efficiencies with this model, do we think that other DEXs will also adopt this hybrid model?
So if you see like different AMM in Cosmos, we can see the farming rewards starting from like 30% to even like more than 100%. So this is what LP is demanding right now. But if you see like Uniswap with concentrated liquidity feature, the basic pool for Ethereum versus USDC pool, they have like less than 10% APY. So it means that still with like less than 10% APY, LP investors might be happy or not, but they are providing liquidity with this kind of like low earning, because ranged liquidity, this concentrated liquidity provide users to amplify this APR within their capital so that they can use more smart strategy to earn this APY, uh, multiplied APY from their strategy. So that is a very great improvement of liquidity providing capital efficiency. Like from 100% to 10%, that is like 10 times better. So we believe that this like 10% is not a good news for farmers, but like ultimately DEX is for liquidity providing, not for farming machine. So like lower farming rewards is not a bad thing for DEX. It is a good thing for DEX because they can provide liquidity with low cost. So that is a efficient liquidity which can be survived in the future, competing with Uniswap or other products. So we are in Cosmos, so we are comparing just like DEX in Cosmos, but we need to compete with Uniswap in the future. We need to compete SushiSwap in the future. Then their APY is like 10%, and then we need to deal with it. So we need to find better way to provide liquidity with less farming rewards, but better capital efficiency.
Is there do market makers have an incentive? And I'm thinking more about professional market makers that can provide like a lot of liquidity. Do they have an incentive to put their liquidity in the AMM as opposed to executing trades on the order book? Because in the AMM, they can not only earn fees, but they also can participate in liquidity. In staking, perhaps through liquidity, liquid staking. They can get farming rewards. Like there's all these other incentives to be on the AMM. What's the incentive model there?
So from our inflation on the total inflation budget, we have more incentive for market maker than LP, actually. This is because we are hybrid DEX and we are focusing more on market maker incentive rather than LP incentive, because LP is less capital efficient than professional market makers. So we can just compare like this. If a market maker place like limit order of 10K within 0.5% price difference spread, then that is like a 4 million basic pool TVL, same liquidity provided. So they just spend 10K, but they are providing like 400 times better liquidity compared to basic pool. So that is why I'm keep saying basic pool will extinct in the near future, because this is like almost like unusable as a capital efficiency way. So we are gradually reducing the incentive for LP investors, and we are increasing more incentive for market makers. So this market maker incentive will be alive October this year, and then we will see much tighter liquidity within the market.
How do you implement this though? So like for I think like for an AMM, we're familiar with the model where you put tokens in a liquidity pool, and then you take those the liquidity pool tokens and you bond them, and then you get rewards. And so it's like written in the contract that what the rewards model would be. How do you how do you formalize this for like market makers? Is it something that can be automated, or do you have to like have partnerships with them, like a more manual process?
Yeah, so we want to have like open participation and competition within market makers, like whether their size is big or small. We want to distribute the incentive for their participation and amount of liquidity provided from them. So we don't want like big market maker having all the market share for our liquidity providing. So we want like open competition. So that's why we are creating an open source program to calculate the market making score for each market maker, so that they can whether they are providing like liquidity with better uptime and better spread and better depth of the amount of the orders, so that we can combine all these functionalities, so that we can have like total score of each market maker, so that we can distribute incentive upon this. So we are going to open source this like scoring calculator, and then it can be calculated from blockchain data, and then we can confirm this data from multiple point, like our validators can prove that the result is same, and then from this result we are going to distribute this market maker incentive by governance, so that the governance can verify that this calculation is right from our open source software, and then we can approve this distribution. So it'll be happen like once in a month, so that the incentive can be distributed to all the participants.
Okay, very cool. We got someone in the chat here. Danman921 is asking this question, and I was going to ask it. I had it in my notes here, but basically, like I was thinking about, in Ethereum, I think most people, and certainly myself, like don't use DEXs. Yeah, I don't use Uniswap or SushiSwap. Like I just go to CowSwap or Paraswap, and because I know that those products are allowing me to get the best price, and they're pooling liquidity from all sorts of different pools. And in the case of CowSwap, like it has the added benefit on Ethereum of being MEV resistant. When thinking about the interchain, maybe these products are a little bit harder to create because we don't have the same composability as in Ethereum. Of course, like things like interchain accounts and interchain queries are going to make that possible. Right now, like it's not obvious to me which products are sort of like the equivalent of a Paraswap on the interchain. Do you think that's coming though? And then if when that comes, like how will that change your like your position in the ecosystem, and sort of how would that change the DEX landscape, the interchain DEX landscape?
Mhm. So I believe that they're already here. Like there is called Rango Exchange, who's doing
Yeah, I
like
use that product. Yeah.
connection of like liquidity from like tens of chains, and
Yeah.
also they have like Slingshot doing on the Osmosis and other tens of blockchains. But more will be coming. I also talked with another project coming to like Osmosis and Near and other blockchains connected to each other. So I think like within like 6 to 12 months, I think there will be more aggregator in Cosmos space connecting to
But these, so
different.
just sorry, but like these products are maybe, I feel like they're different from, you know, a Paraswap or a 1inch, because they're not fully on chain, are they? Like a Rango exchange, when I use it, or at least when I used it, I didn't think that this was a fully on chain product.
Mhm. So even 1 inch exchange is not fully on chain because the computation from front end is used for finding the root. So still it is like hybrid of off chain and on chain, off chain front end and on chain execution. So this is same as Cosmos, but the difference is that Ethereum space is synchronous each other for different dexes, but in Cosmos, like if different chain has different block time, so it's an asynchronous situation. So you will need more time to be executed this transaction, and also like there will be like delay of time to confirm the swap price of the each DEX to be executed. So there will be some challenges, but ultimately, if we have like multiple DEX with liquidity, better liquidity for other pairs. So for this pair, Osmosis is better. For this pair, Crescent is better. Then it is smarter to use aggregator, to use different exchange every time when they swap, because like different pairs will be executed better in different blockchain and DEX. So aggregator will change the competition of DEX. Nowadays, like in Cosmos, like Osmosis is the main DEX, and like 90% of like Cosmos ecosystem users, they're using Osmosis front end. But in the future, like more than half of the users will use aggregator rather than Osmosis, so that other DEX like Crescent or Chain or Kujira or any other DEXs, new DEXs, can have opportunity to compete with Osmosis, because this front end is shared each other from this aggregator. So that if you provide better liquidity, then you don't need to invite users to your front end, because you already provide your liquidity well, and then this will be connected from aggregator. So this is where I see as a future, because users deserve a better trading experience, and Osmosis is not always providing best liquidity for the users.
Well, we'll talk about osmosis in just a minute. There's another question here. Poussin is asking if you're going to implement derivatives products, vaults, covered call vaults, etc.
Mhm. Yes, so we see a lot of demands from users, especially derivative products, but also like managing fund from professionals. Like covered calls is one of the passive ETF kind of product, so that users can have like specific position in the fund, so that they can follow this like benchmark of like derivative products. So also like in Ethereum, there are like innovation coming from managing the LP. So because there's a concentrated liquidity, need to be decided the range of the price for the liquidity, and then this is like subjective area. So which range is good? It is a open question, and it the professional manager should answer this question, because like individual investor cannot understand the quantitative thing and statistical thing around this product. So there should be more service from DeFi space where these professionals can provide their strategy and ideas of how to manage your fund. So there will be like more demand and more product coming so that your multi DeFi position can be managed well from professionals.
Cool, got it. Interesting. Yeah, looking forward to seeing derivatives products on more derivatives products on Crescent. Yeah, I want to talk a little bit about the competition, and you mentioned osmosis, and I think like all the people watching here are familiar with osmosis and probably use osmosis on a regular basis.
Yeah.
Like Sunny, I've heard Sunny say that osmosis will implement an order book DEX sometime, I think like before the end of this year. He sort of leaked that at Nebular Summit a few weeks ago, and a lot of the functionalities around like liquid staking you also share with osmosis. And I'm not mentioning the other dexes, so like JunoSwap or any of the dexes over on EVMOS, but thinking mostly about like kind of app chain Cosmos dexes. I feel like you're in pretty direct competition with osmosis. What's your edge here? Like how do you compete with osmosis, and are you competing on the same types of users and customers, or are you targeting different markets here? Like, because it seems like I don't know exactly what the liquidity is on Crescent, but I'm fairly confident that it's much lower than osmosis. And to be able to, when you're talking about an exchange, a user will also always be incentivized to go where there is more liquidity. So how do you feel about that?
Yeah, so I think it is not a decision making, but it is more like a matter of time to improve the DEX, basic DEX, AMM, to more capital efficient form. So I think like decision from Sunny is like very obvious thing to see, because they cannot survive with this basic AMM. So they should evolve as soon as possible. So like implementing this like range liquidity or order book is like obvious way they should follow. So that is like very expected decision from Sunny. So we are having a completely different direction compared to osmosis. So we are having a vertical integration of DeFi product rather than horizontal expansion like osmosis, having like 50 different tokens. So we are having smaller number of tokens, and also we are going to have more tokens, but these tokens are not native tokens, but synthetic token representing ownership of DeFi product from different blockchains. So like tokens like representing like Uniswap LP position, like tokens like position of SushiSwap position, this kind of different product will be listed on Crescent, and we will going to provide liquidity for them. So you don't need to go to Uniswap to invest into Uniswap. You can just buy this Uniswap token in our Crescent, then you can passively invest into the LP position. So and then we can make this fungible token to be used as a DeFi product, so that you can collateralize this synthetic token to lend more tokens or leverage your position. So this is called a Crescent Boost. So this is like a in United States, the exchange have trading volume of 1/3 of trading volume coming from ETF. So these are synthetic tokens, and there will be more and more synthetic token to be traded in blockchain. now this is almost zero right now, but we believe that there will be like more than 1/3 of trading volume coming from ETF. So we are targeting this market. We are creating a fungible token for different DeFi product, and then we provide liquidity for this because we have better technology and financial analysts within our team, so that we can provide more capital efficient liquidity for these complex financial assets. So we are expanding this area, which is I explain it as a vertical expansion rather than horizontal expansion. But right now we are like also approaching a little bit of horizontal expansion. So we are reaching out to new project, not existing project, which is already in osmosis, but this like new project which will launch their mainnet in the near future. So we are reaching out to this team so that we can have like main liquidity within Crescent, so that we can provide like main liquidity for this like newly launched project. I believe that we have like more than 100 project in Cosmos. Like we will have like 300 more in next year, and then there will be like thousands more next year. So we believe that in the future we have more chance to recruit more liquidity from new project. So we are approaching that. So we are now currently like starting our business development. Actually, we were developing our code base until now, but now we are starting our BD.
So you mentioned that you mentioned that Crescent positions itself as an exchange where one will be able to trade more like synthetic tokens, but from other chains. So things like Uniswap LP tokens and things of that nature. Not so much native tokens like in the way that Osmosis allows you to do that.
Yeah.
That requires a ton of integration and interconnectivity with other chains that may also exist outside of the reach of IBC. And so one of the things I wanted to talk about here, because I know that you guys have implemented assets, bridged assets through Axelar. I wanted to ask you about your vision for cross-chain bridging in the next couple of years, and how you think that's going to evolve, and what is the role of companies and projects like Axelar in ensuring that like liquidity can move between chains without risk. Less than a month ago, like we had the Nomad hack that has left quite significant dent in EVMOS and in that community. It's been very detrimental to that community. Like bridge hacks have been happening since there were bridges. Are we going to look back 5 years from now and look at bridges as like this kind of blip of time where we didn't have the right protocols, and like thankfully that's behind us? Or are we going to continue to rely on bridges to provide liquidity, cross-chain liquidity?
Yeah, so I have bright future expectation about connecting different blockchain. So I believe that like IBC or expansion of IBC will connect most important blockchain within 2 years. So that is a very positive future. So like after 2 years, like we don't have any worry on IBC right now. So we are connecting different blockchain. Maybe IBC transfer can be delayed, but we don't worry about the fund, because like IBC created this like ultimate trust between connecting different blockchain. And like bridges have different applications, and they're always like upgrading their functionality, like fixing the code base, and then this is like done by humans, and like humans make mistakes. That's unavoidable fact. So if we have like different kinds of bridges upgrading too frequently, having more features and changing the features, there will be more risk surface to be exploited. So I believe that the bridge functionality is like a transitory utility until IBC connects all the blockchain. And then these bridges should be stayed within the minimal functionality to transfer tokens. And then they shouldn't like upgrade every month, because like when they upgrade one time and then the users are having tokens within like tens of chains, and these chains should review all these upgrade for these bridges, and it's almost impossible. So right now we are reading Gravity Bridge, but we cannot read all the upgrades coming from Axelar. So we cannot fully trust the code base because we couldn't review all of them. So this is the practical situation with this like bridge functionality, and we need better security than new features because like token transfer is enough for Crescent, and we don't need more additional feature which will make more risk to the users. So we want security for the users, and users only need token transfer. So we need conservative bridges, and we are collaborating with Gravity Bridge so that we want to have a like safety feature within the Gravity Bridge. So we are going to PR a lot of like safety feature within Gravity Bridge, including like daily bridge amount limitation and other like safety halt when the numbers are not right. So this is called like invariant checks. So we are going to input a lot of invariant checks that if there's like one little weird numbering going on within the process, we are going to stop the bridge and investigate. So we are going to have proactively participate in this security enhancement of bridge and like persuade them not to upgrade too much. So that is our approach.
So you work with Gravity Boost, but are you also not working with Axelar?
Yes, we are communicating with Oxla also,
Okay.
but we still cannot approach proactively with this project because it is upgraded too frequently, and it is very difficult for us to follow up the progress. But the
Well,
Gravity Bridge is very slow, so
yeah.
it matches our demand.
Right. One of the things that we've talked a lot about on the show with different folks is the fungibility of bridged assets and the complexity that
Yeah.
the unfungibility of bridge assets creates. Especially for an exchange where you'll potentially be listing lots of different bridged assets. Osmosis have gone one way and decided to put forth like one canonical bridge asset, and at least on their main front end, and perhaps on the secondary, like a frontier front end, they would have other bridged assets.
Yeah.
What are the solutions that we have in order to make interacting with bridged assets? I'm thinking like US dollar stable coins, for instance, smoother for users, and also improving just, I think, the overall like liquidity pooling around those assets.
Yeah. So I believe that the responsibility of interchain DEX is to provide liquidity for trading different assets, especially coming from different bridges also. So we believe that our purpose of our DEX is to provide trading infrastructure for trading assets from different bridge, including Gravity Bridge and also Axelar. And then also there will be more stable coins come within the ecosystem, maybe like USK from Kuzera or IST from Agoric. And those tokens should be traded in one place so that users can swap different tokens within one space. So we are providing that infrastructure. So Crescent DEX will never making one bridge as a prime resource, but we are going to provide as many options as possible for users, so that any users can come to Crescent to swap their assets to different similar assets.
Cool. I'd like to switch gears a little bit and talk about governance, and particularly like I noticed that the Crescent only has 50 validators, which for a Cosmos chain is quite unusual, because you usually have like more than 100.
Mhm.
And also that new validators are approved by governance.
Mhm.
Can you talk about your validator pool, and like
Yeah.
how it's constituted, how it's it is made up, and why this governance necessary governance proposal to add new validators?
So we have very structured process to like have a new validator in our validator set. So we are scoring this with our open validator scoring mechanism quantitatively, so that it can be decided with objectivity. So we have submission of participant from validators. Now I think like this month we have like 20 something more validators submitting to participate on our network. And then we compare these validators with our open scoring rule, so that we can choose like, I think it was like 3 validators. And then we have a discussion within the community whether which one is the best fit for our chain. And then we have a like governance to like vote one of 3 validator from community. So, and then this existing validator cannot vote on this. So only holders can participate in this voting. And then holders will finally choose one validator who will be included in our list. So we have very like structured and like fair participation methodology. And the reason for this is that first of all, 15 validators and 150 validators seems like a big difference. But if you see the power distribution, like top 30 validators have like more than 80% of power already. So it's like all the other like 120 validators have less than 20% power. So it doesn't mean much for the decentralization. But our validator set has a same validator power, so that equal power for each validator. So the power is more evenly distributed compared to like Cosmos Hub or other blockchain, where like top 3 has like much more power than like top 4 to top 10. So like quantitatively, this decentralization does not have significant difference. But this like a low number of validator allow us to have like better resource for this validator operation, so that we can pursue better performance for the order book operation, because this order book has a lot of computation, a lot of transaction to handle. So it has a lot of challenge. And before we upgrade improve our Tendermint core, this challenge is real and practical, because we need to handle like 1,000 transaction or more for each second, and it is impossible with this like existing Tendermint core. So until we have like better Tendermint core improvement, we need to make this validator set as low as possible.
Any thoughts on this question here on potential censorship and front running? I think like, for a lot of people maybe who are like looking at only 50 validators may seem like, that's one metric I think that they look at for decentralization. And certainly the percentage of network security that your top validators has plays a big role. But the number of validators I think also enables people to spread their their delegations across as many validators as possible. Like how do you respond to the fears of collusion with validators to censor transactions? And I think this is especially relevant now, given the whole thing around OFAC and
in Ethereum, this is a huge problem because even Uniswap providing like 10% APY, the just-in-time attack, like steal all this APY from big trading volumes. So like actually the APY for the normal individual investor in Uniswap, they have like much less than 10% APY. So that is a big problem coming from Ethereum. And that is like same thing happening in Cosmos. So that is a big problem. So we discussed with Skip protocol, who are like inventing the MEV feature for all the Cosmos chains. So we discussed about the MEV problem, but the special thing about Crescent is that we are matching orders each other with batch execution model, which not compared to other DEXs having like sequentially executed model. We are having like batch execution model so that all the orders within a block treated equally without any time prioritization. So after discuss MEV problem with Skip protocol team, actually we found out that we don't have any MEV problem within our order book. So only the censorship might matter. So censorship is a big problem in POS, any POS setup. So we are creating a monitoring system within our team so that we can report like statistical evidence of censorship or like a transaction manipulation from validator, so that we can provide this statistical evidence so that the probability of manipulation from this validator is too high, so that we cannot risk to have this validator in the future. So we are going to fire him. So we are going to have a governance to fire this validator and having a new one. So this is like a social mechanism for us to prevent this like manipulation.
I saw that there was a governance proposal, which I thought was interesting, to implement a 3 strikes kick-out policy with a number of criteria for kicking out a validator. Can you describe that? Because that's quite novel. I think I haven't seen any other Cosmos chains do that, and certainly implement it. What is this kick-out policy, and does it also include things like transaction censorship?
Yes. So we need to recast validators like robustness of like participating in the consensus, and also like better uptime and feedback, and also like governance participation. So this kind of like scoring measurement will be implemented into this like system, so that if they are like not participating in a good responsibility way, then we are going to warn them to be better participating.
Who's we, by the way? Like, is it Crescent the company, or is this some sort of coordinated effort with governance? Like,
that will be coming from our team, but the final decision will be decided by governance. So we are giving this like 3 strike, and we are asking governance community so that our decision is right. So if they say it is right, then we are going to kick out this validator. So we are giving them more responsibility than other blockchain, because we have tighter number of validators, and their commission rate is equal to 20%, which is quite higher than other blockchain, because we want to commit them enough return and revenue so that they can focus more energy to the operation side, so that they can have better performance than their operation in other blockchain.
Right. So this policy, this 3 strikes policy, it's not enforced by the chain. It's more like this proposal was more like a signaling proposal for you to implement this policy, watch validators, signal to them when they are going against the policy, and then Crescent, the company, would create a governance proposal when validators have struck out 3 times. So it's more of a social consensus proposal than an actual like on-chain mechanism for kicking out validators.
No. So like when we launch our blockchain, the first governance proposal is ethos of Crescent. So like we are asking our trust from the community about our leadership and the direction of our leadership, so that we can describe all this like direction we are heading, and like asking community to trust on this like leadership, and then following our leadership. And then we have like this kind of like validator setup, which is also like a very like a abstract constitution of how to operate this like validator set. So this is more like a social engagement from our team, so that we can have better communication with community, what we are thinking of, and where we are heading to. So we are like trying to have more communication and more detailed direction to the community, so that we can let them know in advance before we are acting further. And we want to ask community about the opinions before we decide further. So this is how we communicate to community.
Cool. Yeah, it's cool. I think it's like a cool approach to, you know, creating a very engaged and responsible validator set. You know, in terms of the, you know, the number of validators, and then concentrating, like, I think this is like a problem in a lot of Cosmos chains, right? Like you have a concentrated amount of validators at the top. Crescent is no different. I think like Dokia Capital is like first there, and they have like 8% of the chain, and then the second one also has like 8%, or, you know, more than 5. And I think when I was in Korea, I think I heard someone telling me about some chain adopting a mechanism where they would cap the percentage of a chain that a validator could have by some sort of mechanism. I don't know if you've heard of this, or if you're familiar with attempts to do that, but I certainly think that that's something worth exploring.
So from our validator set, we are distributing equally each other for the validator. So Dokia has like a little bit more because they have their own delegation, but like from liquid staking users, the staking is evenly distributed to validators. So like all these 12
liquid staking,
having the same power. So like maximum decentralization within this 12 validator. So that is how we do it. So if we have like 30 validators, then the decentralization will be much better than Cosmos Hub actually, because we are evenly distributing this. So top first will be having only like 4 or less power. So that is how we distribute. But like capping this, it is like automatically capping this, like because we evenly distribute. Like if we have 30 validators, then like each one validator will have less than 3%. So that is like just like distributing all the power with evenly, so that we are already capping this. So now we are capping as like 8 point some percent right now, but it's not like enforced, but it's naturally distributed equally.
Okay, understood. Maybe on a note to end here, you know, you guys did an airdrop a couple of months ago. I somehow didn't get any of these tokens. I think my atoms were unstaked for some time. Too bad for me. But you know, you also have this boost drop that people are you know, waiting for and excited about. What's the boost drop? And I think I was on the website earlier, and it still says like coming soon or something like that.
So boost drop should be happen when the boost functionality is launched. So we are going to have a condition. You will get this bootstrap claimed when you use Boost functionality with like investing your own tokens also. So it will be more like a little bit harder condition for you to claim this bootstrap, but still the bootstrap will be very exciting for all the users to participate in this new functionality connecting to different DeFi's in different blockchains. So I think it will be a great timing. And then I think more detail will be announced in the Cosmoverse this year, September. So like end of September, there will be like little bit of detail about Bootstrap. And then like we are going to launch this Boost October. So I think at that time we will see better detail.
Cool. Well, I guess I'll see you in Colombia at Cosmoverse.
Yeah.
Very excited for that.
Yeah.
Yeah. Thanks so much for coming on and widening my understanding of Crescent. I'll certainly pay more attention to it now and follow the updates and everything. So yeah, thanks so much for coming on.
Yeah. Thank you for inviting.
And if you like the content that we are putting out, there's a couple things you can do. You can like and subscribe to the channel. We're doing live streams every Thursday around this time. So we had a bit of a hiatus for a while, but we're back on track now to do the live streams every week. And you can also delegate stake with Interop Ventures, which is the staking infrastructure provider and fund that I lead. And currently we are live on EVMOS, so you'll find the stake the validator in the description. So please stake your EVMOS with Interop. Thanks again. Thanks for watching. Thanks for joining us on the live stream. We'll see you next week.